Okay, welcome everybody to Wall Street Reporter's Smart Money Live Chat. We are back with the Warren Buffett of Canada, or at least Canadian microcaps, Bruce Campbell. Bruce, welcome back.
Yeah, thanks a lot for having me. It's been a while since I joined you.
It's been, I think it was January. I think the last time you were on in January, we were just at the beginning of the year. And, to recap, the beginning of the year, the market, everybody was kind of optimistic, hoping for the best. And here we are now, like at the, where are we now, Bruce? We had some good calls, by the way, in January with the commodity super cycle.
It's been a crazy year, hasn't it? There's been an awful lot of volatility, and it seems like, the market has one direction in mind, and it's been trying to counter rally that whole time. But it's been a challenging year for sure for investors, especially in kind of more so in our space, and that's just a function of overall risk appetite, right? When the tide's going out, it doesn't help the small caps. And, we've got companies that we just kind of sit back and shake our head about how well they're executing, and yet the stock price drifts lower. So as that happens, it's part of the cycle. And what ends up happening is on the other side of that, you get that, that big ramp up as, things take off.
Yeah. By the way, we're gonna get to audience questions. That's gonna be one of the highlights today. Is anybody has questions about market sector, et cetera, Bruce, or how to become a better investor? Bruce, you can answer that, right?
Well, sure try. Yeah.
Okay. So the big theme is this. I think there's a lot of frustration in the market is that, again, we're seeing companies, they're executing right. They're doing everything right. But, they're not, the stocks keep going lower and lower. We're seeing now, again, I think we're now, how far are we into the bear? We're officially in a bear market for microcaps, right? You would agree?
Yeah, we're a long ways into the bear market for micro, small, and even mid caps. I think it probably, if you kind of look back and started anywhere, depending on kind of how you want to time it or how you want to look at it, February 2021 to probably June 2021 would be realistically where it started. If you look at a bigger index, like if you looked at something like the Russell 2000, then you're probably looking at really November of last year. So we're rolling up on a year. If you look at that broader index, if you look at a lot of individual companies and what they've dropped and how far they've pulled back, we're 19, 20 months into it now.
Yeah, I was gonna say, I lost track. First I remember a year it was 18 months. And now, because my math is not that great. So we're already 20 months into it as of we're almost in October, right? Is that how many months from February, from Valentine's Day of 21? It's been, okay. So, for historical context, right? I see you have a little bit of gray here, right? So from a historical context, how long, again, a lot of investors are watching this. They only started buying stocks in, the pandemic. There's a lot of new people. How long can a bear market like this last? Is this forever, or what's the typical cycle?
You look back over history, and there's been some extremely long ones. You go back into the 1929 era.
Don't scare people, Bruce. Come on.
We're talking 10 years, but if you look at kind of the most recent history in the last 20 years, then you look at the 2001 to 2003, there was rallies in there, but that was a couple of years long, and that was one of the longer ones in perspective. You look at lots of other periods of time, 2011, 2015. Those were kind of 9 to 12 months in length. So, from a perspective, this is probably a little bit longer than what some of those were. But the structural reasons for this appear to be a lot bigger. And whenever you trade the markets, it always seems like what you're in is the most painful at the time. And it's, bigger and scarier than it ever has been before. And we'll come through this and we'll look back, and then the next cycle down, we'll have an upcycle, and then the next cycle down, and we'll think, oh man, this is worse than it was in 2022, but it isn't, right? Every time seems to have its own reasons to be scary.
Yeah, no. So it's interesting. You mentioned structural. So to me, does this feel to you closer to like the 2001 to 2003, that market cycle, like that 2000, whatever, the whole after the dot-com crash?
I mean, there's a lot of people that have been putting that analogy to this, and they are looking at it more from, the NASDAQ, looking at it from the S&P and how much those indexes have sold off and how the duration of how long that is. I don't necessarily know if you can look at it that way, because that was its own event. And that was, technology just got, way overdone. We went into a recession. This is a little different. I mean, this is probably one of the first recessions we've seen in a number of years. And when I say that, we're probably talking 30 or 40, where it's really been severely engineered by the Fed, and that they've wanted to keep their foot on, on that brake pedal to try to slow things down. And in most cases, they are trying to slow things down because things get overheated and they don't want the hyperinflation. But once they start seeing that little bit of slowing, then they ease off. In this case, they're looking at that inflation number and they're not taking their foot off the brake. They keep applying more brakes to the economy because they want that inflation number under control. So it is different than what really most investors have seen. If you've been around in the markets for quite some time and you were investing back in the 70s and 80s, you would have experienced something similar to this, but there's not too many people with that type of experience for sure.
Okay, so officially, you said the R word. Are we officially in a recession?
Yeah,
I know it's not officially, I guess, but are we in a recession?
Yeah, I mean, I think if you look at all the data, you have to think that if we're not there, we're close. And recession is always marked sort of backward looking. If you look at what has happened to stocks, if you look at some of the economic indicators that we've seen, if we're not there, we're close, and we're certainly, if we're not there, we're headed in that direction for sure. I don't know how we avoid that given what's happening.
Okay, so right now, let's say, and our audience is mostly, interested in the, I guess, small cap stock, micro cap stocks, small cap stocks, if you will. What's, like, how to, what is this something, how would you, is this a trader's market? How are you positioning for the next, I don't know, could be several, are we in for another couple of years like this?
I mean, I think what you have to take a look at is what your time horizons are. And this is a market probably not so much for people with shorter time horizons. It's certainly a market for people with longer term time horizons. If you're very good at trading and you can trade overall markets.
When you say long term, you mean longer than a week?
Yeah, longer than a week. We're talking, 3 years, 5 years. That's where opportunities are being created today. If you're shorter term trader and you're trading, week by week or month by month, then there's lots of opportunities for you as well. So, we've seen some of these swings in the market. If this bear continues, there'll be, more swings of, 10 or 15% each way. And if you can position yourself into those, it's a little more challenging with the small caps because liquidity has dried up. But there certainly is opportunities for sure.
Okay, but that's interesting. Okay, so liquidity has dried up. So which is kind of for you, it's not that great, but for retail, who's buying maybe 1,000 shares, it's okay because they could get in and out more or less, right? It's not that much of an issue.
Yeah, for sure. I mean, it has more of an impact on a fund like us where we're trying to move in with size, because when volumes dry up, if we're buying, we tend to push it up, and if we're selling, we tend to move it down.
Yeah, no, it's challenging. So, okay, so basically and now I guess the big question is, I don't know if you can answer this. When will this end? When moon?
Yeah, if I crystal ball, there's a crystal ball back behind me over here. If that was clear, I could tell you exactly when. I mean, I'll tell you what I feel has to happen.
Yeah, what has to happen?
So, first of all, what we have to look at is inflation and the rate of change of inflation. And so far in the US, we haven't seen that rate of inflation change too dramatically yet. In Canada, we have. In Europe, they haven't. So that's going to be the first thing that we need to see, is we need to see that rate of change of inflation change. Now, based on kind of what's happened in the past and the rate of acceleration of those numbers, we should actually start to see inflation drop off here over the next several months. And by probably the end of the first quarter of 2023, I suspect that we're probably going to see inflation in, around the 4% range, which is still a lot higher than what the Fed wanted, but it's half of where it is right now. So I suspect that the market feels a lot better about that. The challenge is that the Fed's been increasing interest rates all year, and they, have increased interest rates again today, and they've done it at a rate that's a lot faster than they have historically been increasing interest rates. That takes a while to work its way through the economy. So the concern is are they increasing interest rates into a slowing economy? And if they are, what effect does that have on our earnings? And so that's, the market's kind of transitioned. It's still worried a little bit about inflation, but now it's going to start to transition and worry about earnings as well. So once we get that, where the market feels is that earnings trough, then that's where you can start to see to the other side. And when you see it to the other side, that's where market bottoms and starts to move, and it'll be ahead of the economy bottoming, and it'll be probably at a time when the headlines are still very negative, and most investors are fearful of what's happening.
I'm sorry, to explain. So the turn will be once all the bad news of earnings is out? No, once earnings pick up?
No, it'll most likely be as that bad news is coming out.
Yeah.
But the market, keep in mind, the market's always looking, 3 or 6 or 12 months in advance. And so it's looking beyond what's happening today, and it's looking what's going to be happening in the future. So while you might still have negative headlines, it might also be looking at its data points and saying, oh, we actually think that things have bottomed and will start to turn. And that's when the market then starts to reaccelerate.
Okay. So, and that would come around the point where things start to get less worse in terms of the inflation prints, like as the numbers come less worse, is that, or what?
Well,
I think February, December. Give me
I think the market, probably over the next several months, we'll start to see that inflation number coming down. And I think it'll probably come down a lot faster than most people expect. The challenge is going to be the numbers are going to come down. I mean, if you look at, in the last few weeks, what have we seen? We saw, FedEx report last week, they guided down. We've seen Walmart report, they guided down. We saw Nucor report, they guided down. There's been a number of bigger companies that have all, followed the same pattern. We'll see more of that in the overall market. But at some point in time, that's not going to matter anymore, because the market will have priced that in. FedEx was clearly a surprise. It was down, 20% plus that day. And so the market wasn't anticipating that. But when the market now is priced in that slowdown, and then the news comes out and it doesn't affect the stocks, well, maybe that's closer to where we're bottoming, because then it's starting to look ahead and say, okay, well, we've already priced in the slowdown. Now what's next? And that what's next isn't next quarter, but it might be 2 quarters or 3 quarters down the road.
So the canary in the coal mine will be when, company releases bad earnings or other bad news, and the stock doesn't react negative. It doesn't drop, basically.
That's sort of the way of the psychology of the market. Yeah. So, to start with, good news is bad news, and then bad news is bad news, and then bad news is good news, and then the market starts moving up.
Okay. So in the microcap space, what are you doing right now? Now, interesting. At the beginning of the year, you were bullish on, again, you said the big theme would be the commodity super cycle, right? You're still are we still on the commodity super cycle?
Well, I mean, it's kind of been delayed here a little bit in that, what we've seen
happen. It started kicking off.
It did for sure. Yeah. And I mean, we saw that certainly with energy. Some of the base metal commodities have not hung in as well. You look at copper, it's pulled back a lot, and everyone talks about Dr. Copper being, one of the best, measurements of the economy. It's pulled back as the market's concerned about economic activity. Well, at some point in time, that's going to change, and those are going to move the other way. We're starting to look quite closely at a lot of those underlying base metals and precious metal stocks here right now. The US dollar has been so strong, and historically it runs inverse to what metal prices do and commodity prices do. And so if you were to start to see the market looking, past that valley to the next peak, the US dollar is going to start to weaken. Hasn't yet, but when it does, there's going to be an opportunity there. And we probably see, kind of the next leg of economic growth. And there certainly will be an opportunity in those areas, especially given how beat up they've been.
Okay. Timing wise, can you make a wild guess of when gold?
We watch that kind of stuff
Yeah.
day to day and week to week. We're getting more excited about what we see. And when I say that, it's the rate of change. So that rate of change is still like this. But as it starts to go like that, that's where we'll start to get excited. And we've seen a little bit of that rate of change. We haven't seen this yet, but once we see that, that's where we get super excited.
Okay. Now, one thing I think you're bullish on at the start of the year, you said like the cannabis stocks could do well, right? And there was a bit of there was a little flurry of activity in the beginning of the year, and now, again, with everything. So again, Michael's asking, what are your thoughts on the cannabis psychedelics stocks?
The cannabis stocks have been horrible this year. If you only held those, you'd probably want to hide under a rock because it's been so bad. And there's been a few reasons for that. There's been, the overall market, and we didn't probably process this as well as we should have, but during the pandemic, when everyone was sitting at home getting paychecks to sit at home, there was more cannabis consumed. And then when people started to go to work, they didn't have as much time, and in some cases as much, free capital to go spend on cannabis. And so we actually saw the volume, start to weaken a little bit as far as sales go. So that was, issue number one. Issue number two is that from a structural standpoint, a lot of the US multi-state operators are listed on a Canadian exchange called the Canadian Securities Exchange. And with it still being federally illegal in the US, a number of those custodians that are in the US that hold money for institutional managers said, nope, we're not gonna hold those assets anymore. So it forced them to sell. And then the third thing was that we saw, we've seen a number of different reform acts to work towards not necessarily legalization, but some sort of regulatory reform to improve cannabis. And none of those have actually made their way successfully through the House and the Senate in the US. At this point in time, though, some interesting things are happening. So one is that the sector itself, we're seeing several more big states coming on board. So, you can look at kind of what's happened in Illinois, and it's been a huge success, over $1 billion in sales, and it's, just a little over a year into it. New Jersey just started rolling out this year. New York, they're expecting could be as early as December of this year that they actually start selling. Those are going to be huge markets when they get up and running, and they don't just happen, they don't just go from here to there. It's a ramp up, but that will be increased sales. So that's profitable, and that's good for those stocks. And then the second thing is that from a regulatory standpoint, it looks like now we have kind of the best chance ever to get reform passed through the Senate. The Senate's always been the sticking point. And from a number of conversations that I've had with people who are way smarter than I am as far as how the political system works in the US and how the senators are going to vote, they feel that they have the votes to get the SAFE Act, which is the Banking Act, through the Senate. And they feel that that will happen sometime after the midterm elections and before the end of the year. And if it does, that would be a fairly significant catalyst, because then it allows these cannabis companies to bank. It allows them access to capital, but it would also allow them, in a lot of cases, to move towards having US listings. So instead of just having a Canadian Securities Exchange listing, they could have a NASDAQ listing or a New York Stock Exchange listing. And we know that both those exchanges are very interested in listing cannabis companies, but they need, some of these other things to happen. So right now, those cannabis stocks still continue to be under massive pressure. because they're really lost candidates, and we think that there's probably a lot of selling that still's going on. The risk appetite isn't really there. We haven't seen that legislation change, but we could see, potentially things could really shape up for next year.
It's interesting. Does this remind you a little bit of like almost, it's a little different, but like it's almost like, e-commerce or, the internet stocks, etc. Like again, after there was a big run up, 90s into 2000 on, the future, buy the rumor, sell the news, everybody was buying the rumor. And 2002, all these stocks were down, 90% or more, Amazon included. And it was almost like as if everybody said, okay, that's it. The e-commerce is dead. There's not going to be any more technology. It's all, but meanwhile, all this stuff was booming under the surface. PayPal, all these great things were happening, and things turned, and all of a sudden everything's up, 100x. Is the same thing happening with cannabis? Because we had this kind of, first this gold rush mentality, everybody bought on the rumor. And meanwhile, things are progressing. Like you mentioned, more states in the U.S. expanding. There's other things. Finally, you have the SAFE Act, which probably everybody forgot about, but that's been being worked on forever. And now, again, all these stocks are down 90, 95%, whatever it is. Could this be that same type of opportunity, or all of a sudden?
We think it is. If you go back to 2000, no one really talked about total addressable market, which is kind of the lingo of the last, sort of 5 or 6 years now. They just talked about, what the opportunity was, how many eyeballs and clicks and people watching. And you're right, those stocks got way overinflated, and a lot of them disappeared altogether. But the ones that survived did extremely well. Why? Because we built this huge market. But that market, 20 years ago, we weren't using these to do our shopping or buy an airline ticket or, share a car with anybody. Right. We were still doing it all a different way. And so that market hall had to be built and developed. The cannabis market has been there for thousands of years, and the illegal market's been there. It's being consumed. It's, all that's being consumed now. And it's a function of moving it from illegal over to the legal market. That doesn't happen like that. It happens over time. And, there's been challenges with that, but that will continue to happen. So this is a huge market that's already there. It just has to be, built up. And as that happens, the players that are there, the companies that are in place, the ones that survive will do extremely well.
Okay. Now, when you say, so speaking of extremely well, you have specific picks in the cannabis space?
Yeah. There's a number in the cannabis space. Probably one of our favorites is a company called Verano. They're in, I believe it's 15 states now. And, they continue to get more licenses in new emerging states. Interestingly enough, they went public, VRNO. Okay. They went public right about the same time as the market was topping out, which was, call it February of 2021 is when they went public. And so they never really got the same valuation that everyone else had. So they've come down a long ways. Don't get me wrong. Like the stock's off from, I think it was around $30 and it's now in the 7s. So, if you held it that whole time, you've been hurt for sure. But what's happened is it trades at about half the valuation of all of its peers. And yet they have similar margins, similar growth rates to everyone else. And they just continue to build a big business. And at some point in time, the trend changes because it always does. And as we talked about, this is a legal business that's going legal. And as that gets bigger and bigger over time, then what ends up happening is it gets recognized, and it'll be, in my opinion, it'll be one of the ones that does survive and does extremely well. And, you can get it for roughly about half the price of all the others right now from a valuation perspective. And then if you also get that multiple expansion, and then you also get the sector moving up, you can really make money in kind of two ways. That being said, you're going to be patient here because, with it coming off as much as it has, and with people making money in other sectors this year, there's going to be people that look at it and say, just get me out. I'm going to use it for my tax loss and I'm going to move on. So, over the next few months, you could see some more weakness in the stock because, and the whole sector really for that matter, because of the fact that they're tax loss candidates.
I think last year was a pretty brutal tax loss season especially for Canadian stocks. I mean, like last December, it was really bad. Do you see this year being similar, or is this going to be like a capitulation? Like, can we see a big capitulation coming in the next few months for these?
That's one of those things that's impossible to tell ahead of time. But yeah, I certainly think there could be some tax loss selling happening. And, from what we've seen in the last few years, that tax loss selling generally has started earlier each year. So I actually feel that there's probably some pressure on some of those stocks right now, even though, historically tax loss selling isn't thought of until the end of the year. But
Getting ahead of the game, they know they're worried about. They want to front run the sellers.
Right. Everyone's trying to front run the sellers, and they're also looking at the opportunities. So, if it's a sector where it's sold off, and Verano as an example, you sold the stock at $8 and it goes to $6.50, and you can buy it back at $6.50 after your period where you have to be out. Well, that's an opportunity versus if you're the last guy that's selling it at kind of $6.50, right? But the other thing is that with this legislation that could potentially be passed, there's people that probably want to be out, take advantage of their loss, but they don't want to be out for that end of November period when legislation could potentially happen. Because if you were to see that safe banking, oh my gosh, like these stocks could have huge runs up. And I mean, you think about the last time that happened during COVID, we saw some of these stocks go up 400% in, a period of 5-6 months.
Yeah. No, it's okay. So yeah, that's interesting. It's a very interesting point. Okay. So now what about, how do you see psychedelics? What do you see? Do you see that as something completely different? What's your take on that?
We do. Yeah. I mean, the thing that we've always looked at with cannabis is that it's always been a more mainstream drug than psychedelics have been. There's lots of people that use cannabis and have used cannabis behind the scenes for some time on a recreational basis and on a medical basis, and they just cross over. The psychedelics are a little bit different in our opinion. The recreational market is really not there, and we don't think ever will be to any size. Where the opportunity is in psychedelics is when you go through a real full formal pharmaceutical grade product. So we believe that there's real opportunity in psychedelics once they sort of pull an individual compound out of that, test it through the formal process of FDA full double-blinded trials, and then end up with a prescription drug that gets used by a doctor through a pharmacist. That's where we think the opportunity is. To us, though, that's a longer term and more expensive event. It's more like a biotech.
Yeah.
And we historically haven't invested in a lot of those because the outcomes of those tend to be binary. And if you're right, it's like having the winning numbers for the lottery. But if you're wrong, the stock's basically worthless the day the numbers come out and they're not your ticket.
Yeah, no, fair enough. Okay, so let's kind of wrap up with, okay, in terms of, what about mining in the resource space? So what sectors do you like going forward? Because I know we're in a kind of a weird environment.
And I mean, there's a few individual areas and individual names that we are quite excited about.
Okay.
So in the resource sector specifically, we do feel that oil and gas are probably going to bounce around here as they have. But if you think about, kind of what's happened over really kind of the last 6 to 8 years, is there's been a real underinvestment in energy infrastructure. It was, thought of as kind of like very unenvironmentally friendly. ESG had people sort of looking down on that sector, and yet we're still using hydrocarbon, and we probably will continue to for a number of years. And so, there's tremendous opportunity there. Right now, one of the focus has been on, most of these energy companies has been on being very disciplined about not growing, but returning capital back to investors, which is fantastic. right now we're in that environment where everyone loves cash flow because the market's been so volatile. But we know that historically the market wants growth. And so, as an example, one of the companies that we own is a company called Southern Energy. And so what they do is they're in Mississippi, and they've bought they bought some property, got in there. And these are all old wells, old areas that were, where they basically just poked a hole straight down, or they poked a hole and went sideways. But, when they went on those horizontal, maybe they went, a quarter of a mile, and maybe they had 4, fracs. Well, now they're going a mile and they're doing 50 fracs. And so the recovery that you get out of the same gas field is way more enhanced. In their case, they're right close to Henry Hub. They're 90 miles away. So they actually get premium pricing to NYMEX because of all the LNG opportunity. This is a team that's done it all before. And so they've gone from, 1,500 barrels a day to where they're about 3,000 now. They got a drilling program over the next year where they'll drill, and they'll have, they're expecting that they're going to have around 8,500 to 9,000 by the end of next year. Interestingly enough, that would generate that based on their strip pricing right now, that would generate about close to $90 million in cash, and the stock has $100 million US market cap. So you're trading at like 1 times cash flow.
What's the symbol?
It's SOU, so it's Southern Energy.
Okay, SOU. So it's trading a 1 times cash flow. Okay.
Yeah.
Okay.
And so that we think that's kind of interesting because we have other areas that we think are kind of more consistent with production and cash flow, but that's one that we think is going to be a growth vehicle, and it's going to be one that kind of shows up on a lot of radars. Right now, there's not much coverage. From what we understand, there's going to be a whole bunch of new coverage on it. Another area that we really like is the helium sector. And so most people think of helium as party balloons and talking in a really high pitched voice, but that's not the case. It's used in a lot of high tech applications. It's used in the space sector, and the issue is that the supply of helium, a lot of helium comes from Russia and some of those countries over there. So that's been a challenge to get good supply. And then there's been a large helium resource in the US that's been depleted, and so now the price of helium continues to go up. And so we have an energy team here in Canada that was with an oil and gas company, and they've transitioned into helium. They're with a company called Avante Energy, or Avante Helium is what their name is now. And they're in Montana. They've drilled a couple of wells so far. Their first well was economic, but their second well was probably in the top 5 of all economic wells ever drilled in North America. And so they're just in the process right now of tying that in and having production done on a mobile production facility. And then they're going to drill a bunch of other wells. The economics here is unbelievable because, it's kind of like similar economics to what you would expect in oil and gas. But on helium, they can get between, say, 400 and 600 MCF pricing. So it's quite interesting, and there's not a lot of other companies doing it. There's probably a handful. It's AVN, so Alpha Victor Norman.
Okay, AVN. Okay, so helium. Okay, so you haven't mentioned any tech stocks today.
Well, I mean, there's certainly tech stocks that we love. There's also some healthcare stocks that we love. Okay. So one of the ones that we just constantly kind of shake our head, and this is where our conversation at the beginning, where we can't get over what the market's just ignoring at this point in time because it'll eventually become important, is a company called Soluna Global. So it's SGMD, and they're in the rehab business. So this is something that doesn't change with a recession. You're not going to not sprain your ankle playing tennis because it's a recession. You're still going to go and you're still going to get it fixed by your doctor and your physiotherapist. And so this is a gentleman by the name of Les Cross is the chairman of this company. He was the president. He just recently just is only focusing on being the chairman. He started a company called DJ Global. He took that company public in 2001 with a $153 million IPO. He sold the company in 2007, so 6 years later, for $1.5 billion. So you do the math, that's a 6-year 10-bagger. Warren or Peter Lynch used to always talk about 10 baggers. Well, he had his own 10-bagger. He started and he's doing this all over again. So he went public June of 2021. And at that point in time, the first company that they bought, they had about $13 million worth of annual revenue. Right now, their run rate revenue before they close the deals that they have is about 40 million. Once they get these deals closed, it's going to be somewhere probably around 80 to 100 million. And the stock's trading at, 1 times where revenue where it is today. When he sold DJ Global, it was at 4 times sales. So you can see what the upside is.
He's doing a consolidation play.
Consolidation, yeah. Okay. So what he's doing is he's going out and buying all these individual companies, bringing them in, having the production or the facility manufacturing done in his own facilities, increasing the margin, and then the synergies of being able to cross sell. And so they've had organic growth, they've had acquisition growth, but right now the market's just, again, it's not even paying attention to it. It's just like, we're not even going to worry about it. The guy has a fantastic track record. It's just DJ Global 2.0. And you know what he did last time? He's going to do the exact same thing. Apparently, he's got a lot of the same team members that he had at DJ Global who have joined Solana Global. So that's not really technology per se. They use some technology in their manufacturing. But I mean, that's certainly an interesting area. From a pure technology standpoint, a company that we like is a company called Neuroscene. And so they actually have a really interesting artificial intelligence platform. And so what it's doing is they're able to partner up with drug companies, and by running the drug and the compound and the interactions and the pathways through their system, it's able to shorten the amount of time. It's allowing them to develop and shorten the amount of time that their trials would take and be more successful. So how they get paid is they get an upfront fee, and then they also will get royalties if and when that drug is successful.
Oh,
and
really?
It's again, yeah. And
they
so
get a royalty. How much do they get?
It depends. Like they're going to negotiate those all on an individual basis, but they're getting these upfront payments. So they're starting to get upfront payments now.
But it's going to be a few years. It's blue sky.
Yeah, it's going to be a few years before you get the royalties. But if you look at the press releases, they just keep signing these deals. And again, the stock is, it trades by appointment, and it's really, it's MEND. So Mike Echo Norman Delta.
Okay, this is Nasdaq stock.
It's on the. I'm not sure if it's on the CSE or the TSX Venture.
That's a good story. It's like multiple shots.
Yeah, I mean,
shots on gold, blue, with the blue sky, upside.
Yeah, and the technology that they have. If you look at some of the names that they've attracted from a drug company perspective, you kind of shake your head and go, wow, like why are those guys doing a deal with this little company? So we're quite excited about that from a pure technology standpoint.
Okay. Let's wrap up with some audience questions. Bruce, you ready?
Sure.
Okay, so these are going to be a little bit biased because these are from, I guess from our, people in our audience who, Visibility Group. Are you, what do you think of that one?
Yeah, so we don't own it, but we're watching it really closely. We think that what Jay and his team are doing there is really interesting. You can kind of see how this has a huge opportunity down the road. Again, the market's been so punishing on these companies that are, in their case, really they have a little bit of revenue, but they're still kind of pre-earnings, and they're still ramping up their revenue. But that will change at some point in time when the market starts to look differently. And, we think that there's huge opportunity there. They obviously have some big deals. Again, the partners that they have, you kind of shake your head and go, why has this little company got those partners, right? They must have something.
No, it's interesting. Yeah, I think a lot of investors are probably irritated that, they did this financing, right here at the bottom of the market. The stock was, $1.50, $2 at the start of the year, right? Why, a lot of these companies, have done raises here. Why weren't they thinking about this 6 months ago when they did it, right?
Yeah, I'm sure they were. They also, they don't have the crystal ball that we do say. And so they weren't able to see if the market was going to come off as much as it did. I'm sure if they knew that they was going to, they would have raised, more significant amount of money at a higher level. And then, it's that sort of wait. They're waiting because they want the market to go up, but then the market knows they're running out of money and they need to raise money, so it keeps pushing it down. And then eventually they have to say, okay, we're going to do it. We're going to raise here, and they do. And then, it makes existing shareholders annoyed, and it starts a new base for a bunch of new shareholders.
Yeah, so it's a good news, bad news thing. What about Relic? Relic. I know you were in and out of that one for a couple times, right?
Yeah, we still like Relic. I mean, we don't own it right now. We owned it, I guess, close to a year ago now. And actually part of our process, we ended up getting stopped out of it. And
A profit. You were making it was basically you're in the money, and it
we
came
were
down.
in the money. We stopped out, and to be honest, I don't know if we actually made too much. We may have made a couple of pennies. Like I think we bought it for around 99 cents, and we sold it for like 101 and 102 is sort of where we got out. So it wasn't like, oh man, we made a ton of money, but it was just part of our process. But we do like what they're doing there. Lisa and her team have huge opportunity. If you look at the number of different doctors, health organizations that they've signed on, if they can bring those people, hook them up, and start getting revenue, the revenue could be huge. And it's really at probably a bit of a turning point here, where kind of over the next 12 months they get to achieving a lot of the stuff that they've talked about over the past. But yeah, it's the one that we have, we follow quite closely. We watch kind of everything that's happening, and we model it out, and we're just kind of waiting for the right time. Probably end up back in there at some point in time.
Okay. Yeah, it's interesting. A lot of times these companies, but it's sort of the timing is never, nobody gets the timing right. It's always, everything always takes a lot longer. By then the market is down, and that's where the opportunity is. It's for
that's the biggest frustration for most smaller micro cap, small cap, even mid cap companies, is that it often takes longer. Anyone who's ever been in business, it takes longer to develop your business than you ever think it's going to. And it's that frustration of investors want immediate returns, and when they don't see it, they kind of give up. And yet there could be that opportunity just right around the corner.
Yeah, no, look, the idea is, of course, the idea is we want to get in right at that inflection point. We don't want to wait the 3 years, or in Relic's case, I don't know, it's like years, right? Their model, a lot of things, but the company is going after some interesting opportunities. What about, okay, we got questions about energy stocks coming in here. Trillion Energy.
Yeah, we don't know it super well. We're still just trying to come up to speed on it. It certainly looks interesting with a huge opportunity. We don't own it, but yeah, we've just been kind of starting to do a little bit more work on it.
Emerita, do you know this one?
It's not one that we really know at all. No,
it's a gold play. I think it was a gold play.
Yeah. Unfortunately, sorry.
Okay, now the Bruce, you better say good things about these two. I don't care what these are, our current clients. Nextech or XTM. These are going to the moon, right?
Yeah, I guess they must be if you guys are looking after them. No, again, I don't know a ton about those. We've looked at them a bit. We're been spread a little bit thin here, so we haven't probably spent as much time on those as we should have. So,
it's the same. I mean, I don't want to like sell you the story, but these are basically very similar. The massive market opportunities, and I think they're at that inflection point. But we'll have to see. What about do you know this one, Data Metrics?
I don't know Data Metrics. No.
It's a kind of, I think it's an under the radar one. Let me see. Do we? Okay, I think we've covered most of these. Okay. Oh, here's a great question. I think we'll kind of maybe finish on this. Do you see low liquidity, basically a bad market for 5 years? I didn't even see that. Should have asked this question. Can you see this going on for the next 5 years?
I mean, anything's possible in markets. I would say the probability of that is fairly low. With what we look at, we actually think that we're probably in the 7th inning of the bear market. Maybe we could be even further along in that, but we think that there could be some more volatility here with interest rates and with the Fed, and then with what we talked about, sort of playing catch up to what that means for a recession. But when we look at a lot of relationships that we watch, when we look at small and mid cap stocks and indices, we see that, again, that rate of change was like this. And now we're seeing this happen with the momentum. We haven't seen that yet, but we're seeing this. And so, how long is it before that? Well, that could be, 2 months or 2 quarters. But once that happens, then you'll get that life back into, a lot of these small caps. So if you're an investor and you have, again, that sort of 3 to 5 year time frame, you can buy some of these opportunities. Like, you think about that Solana Global that I talked about. Les did a 10 bagger in 6 years, and he's a year and a half into this. Do you think he's going to do that again? I'd be willing to put my money on it. So if you can buy it here, and it means that you got to wait for another 3 years for his 10 bagger to arrive, and it happens really lumpy, hey, you've got a really nice return over that period of time. The problem is most people aren't patient enough to do that.
Yeah, so it's interesting. So you mentioned two things, like you have a process, and I don't know if you want to go through it again, but so one thing you mentioned is the stop. You got stopped out of a position. So one of the things I think, can you explain your process? Like when you get into a stock, you're up, you have a profit. When do you put the stop in? Like what's your kind of is it at the moving average, or where do you put that stop in to protect the profit?
So we actually use a volatility stop. So it takes into account where the stock is, what the volatility of that stock is. So, if you were to look at, just as an example, Bank of America and Relic, they're going to have two different, completely different profiles on how much volatility they have in an average day. So if you said, we're going to set a stop at 5%, well, Relic could get hit right away, whereas Bank of America's not. So what we have is a volatility stop. So once it trades through a certain level and it's calculated based on its volatility, how much a day moves on a daily basis, then when we can, we'll move out of it. It depends on the circumstances, though. What we do when it hits those volatility stops is that we then go and review, why has it hit that volatility stop, and should we make that sale, or should we make that change? And what it often comes down to is, if we don't know the reason for it hitting that volatility stop, we will sell it. If we know the reason, quite often we'll stick with it. It doesn't mean that we're always right, though. There's times when we know the reason, or we think we know the reason, and the stock continues to go lower, and then afterwards we go, oh man, we should have.
That's the thing. But
we should have followed that.
Because you have a discipline, but then if you second guess, we know that, but then that's, how do you avoid that? I mean, is there any way to avoid that happening?
Well, I mean, the way to avoid that is to be purely system driven.
Yeah.
The challenge there is, like I said, there's times when we know something's happening. So, as an example, a company, that the company has warrants that are coming up. The warrants are being accelerated. They're being exercised. The stock sells down because the warrants are there. Yeah, trades below your stop, but that those warrants are only exercisable for another 3 weeks. Do you sell it now and hopefully get back into it and try to be cute? Or do you go, okay, we know that period is going to be finite. There's going to be some selling pressure because all these people are selling stock to exercise warrants. But, we can probably add to it. If not, just hold and ride through it. And then it's going to go higher versus, went through the stop. We don't really care about what's happening. We're just going to sell out.
Last thing is the rate of change. So explain that. What's the role of that in your process? Like, how do you look at the rate of change? Like you mentioned, like right now, these stocks have been, at a very steep, kind of decline. And then now it's kind of, explain to us, how do you view rate of change?
Yes. I mean, we look at a number of different technical tools. We look at momentum indicators. We look at pure rate of change, and so we're looking at that. So, as an example, if a stock's been dropping and its rate of change is negative, and now all of a sudden that rate of change goes to where it's, flat. And then the next thing the rate of change starts to move the other way. Well, we know that, for the most part, the sellers have been exhausted. Then there's a period of time where it's kind of balanced. The sellers and the buyers are kind of even. And then all of a sudden the buyers are coming in. And that's really what we think, or where we think we could be with the overall markets, is that, as we talked about, this bear market, especially in the small, mid cap and micro cap area, started, call it February to June 2021. So it's been going a lot longer. And if we look at that rate of change, it's been like this, but it's starting to go like this in a lot of areas. And so to us, that means those sellers are exhausted. Does it mean that the market goes up like this? Well, no, because there's still lots of structural things, but it could be that, sideways for a while before, then the market starts to look past this and they look at it individually, and then, the stock starts to go.
But we could be, like you said, we're in like probably this could be in the 7th inning of this bear market. So we might be in for a period of maybe this kind of building a base, if you will, as this kind of rate of change, as a kind of, the selling is exhausted. So like a lot of these things, I don't know how much lower they can go. I mean, because a lot of these things, I mean, they could go lower, but
they can always go lower, and they kind of always will when you don't expect it. But if you go back to what I was talking about, so there's, in our opinion, there's kind of two things, right? There's that inflation and there's the sort of recession earnings driven. We think we haven't even started to really see that those inflation numbers, especially in the US, start to come down. But you look at Canada, we've said the last 2 months, we've seen drops in our inflation rate. Canada and the US have, fairly similar economies, makeups, all that type of thing. We suspect that we're going to see that rate of change for inflation actually surprise most people and start to come down. And by the first quarter, like I said, it'll be in that 4% range. That's great. If we were only worried about that, the challenge is that with the Fed increasing interest rates and all the other central banks increasing interest rates, that's structurally difficult for the economy. And so as a result, earnings are going to be lower. So when we get to that point where, inflation probably hits our target and hits the Fed's target, the economy isn't necessarily going to be strong. So how far out does it take before that economy starts to pick up? And what's needed to be done? Does the Fed have to go the other way with interest rates? Do we just have stability because of inflation? And so that's where the kind of art part comes into the science of investing.
Okay, so this is kind of like, Bruce, have you ever seen the movie Apocalypse Now?
Yeah.
Yeah. So this reminds me of, it's kind of like that scene when they're on the beach, the bombs are dropping and Robert Duvall, the guys are surfing, and he says, he says, someday this war will end. Just like, so this is kind of what it feels like. I mean, the bombs are dropping, like, this chaos, but we're kind of getting, it's going to be, the cycle is going to turn. So that's perspective. We're going to make.
Yeah. Right? And I mean, that's it's the human nature part of markets, that emotion goes from one extreme to the other, right? It goes through that cycle. And right now we're, somewhere in that middle range. Like, it hasn't gone all the way down to the bottom and it hasn't started to turn up yet. And we've been at the top, and no one knows where that is. If they do, by all means, please call me, because I want to use your crystal ball.
So, to wrap up, your favorites, your some of the stocks we mentioned that you like for the next, or fundamentally you like them here. MEND, MEND, right?
Yeah.
SGMD.
Yeah, Salona Global. Yeah.
SOU.
Yeah, Southern Energy.
AVN.
Yeah, Avante Helium. Yeah.
VRNO.
Yeah.
Okay.
Yeah, Verano.
Okay.
Yeah.
And your funds, most importantly, this is Stone Castle, get with the funds. For somebody who wants to, invest in, the Bruce Campbell story, what funds, how do they get in touch? What do you have to offer?
Yeah, I mean, the easiest way is just to send us an email to info@stonecastlefunds.ca, or go to our website, stonecastlefunds.ca, and you can, there's our contact information for myself and all of our team.
Okay. And which fund, how many funds do you have right now? You have you have different products. You have.
Yeah. So we have 4 funds. So we manage, the Stone Castle Fund is our own fund that we have that's direct client. So clients actually come in through us. We manage 2 funds for Purpose Investments out of Toronto, the Purpose Canadian Equity Growth Fund, the Purpose Canadian Income Growth Fund. Both those are available kind of on all major platforms through advisors, all that. And then the last one that we have is a cannabis dedicated fund with our partner Spartan. It's the Stone Castle Cannabis Growth Fund. And again, it's available, kind of through all the channels, through all the advisors, and it's right there.
Okay. Excellent. Bruce, thank you again. Hopefully next time we catch up with you, the markets will be up.
That's right. Yeah. Well, based on the cycles, hopefully that will be the case.
Fantastic. Thank you again. Thank you everybody for joining us and all the great questions.
Thank you.